And record. Okay, girls, this is Heather Pillow. We are going to spend the next hour getting anal with our resident tax man. This is Mark Sherry, our CPA. His wife is also a longtime consultant in our industry, so not only is he amazing with numbers and taxes, but he really knows our business from the bottom up. Like, he truly understands this. So tonight he's not only going to be talking about how to generally deal with taxes, but he's going to also focus, for those of us that were with slumber parties and went through the transition in 2014, how to make sure that we handle that properly. And then at the end, he'll answer all of your questions. So make sure you're taking notes. If you have the ability to record this, please do. It will download as an MP4 to your own laptop. And again, you can text me if you have questions, or you can post them in the chat room. My tax number, my phone number is 703-609-2648. And you can probably Facebook message me too, and I'll be able to see that as well. All right, Mark, I'm going to turn over hosting ability to you.
Yeah.
Hold on, let's find you on the list, and then you'll be able to screen share. Okay, you're the host.
All right, very good. So it's nice to talk to everybody tonight. This is great. This is the first time I've done a webinar intensive with Heather, so this is great, exciting. I'm going to see if I can share this, and we will pull up the PDF. And if we try this, share screen. Okay, so hopefully everyone can see the PDF document, and I think that Heather will send you a copy if you ask her to, or she might have already pushed it to her page.
I'm going to actually post it on the group after this.
There you go. So follow along, feel free to take notes. And now that I'm sharing a screen, I'm not sure where I see chats. Somebody throw a question up there. Let's see what happens. Well, somebody wrote on my thing, so that's good. All right. So basically a little rundown. I'm a CPA. I've been a CPA for 15, 16 years now. And as Heather mentioned, my wife has been in the business for almost a decade. So, and I prepare taxes. So a little bit about me. I do a lot of consulting with small businesses. I also do individual income taxes and small business corporate returns, partnership returns, everything income tax related. So that's a little bit about me. I've been Heather's CPA for about 5 years, 6 years.
Yeah, 6.
Maybe longer than that. Yeah. And I probably talk to about 40 to 50 pure romance consultants every tax season. So many, many clients. I don't know it all, but I can be dangerous about it, I guess. So a little disclosure, you know, I don't know what happened with this. Can you all see this blurry purple line?
Yeah. It looks like something artistic.
It does. I'm not sure how it got there or how to make it go away.
That's all right.
It's definitely there.
It's actually on the screen.
It is on the screen. Uh-oh. 1 second. We lost our visual. Here it comes. Try this again. Okay, so a little disclosure, you know, as is required. I love the purple. You know, this is all just general advice. I have to tell everyone that if you have specific questions, feel free to, there it goes. Feel free to email me later or call me or text me, and I will try to answer you. But the IRS requires that I give you a disclosure about that. But all of this is just general representation, and that's that. So that's out of the way. So the rundown for tonight is, before we get into it, it's a little bit about how to be organized as a whole when you're running your business. And if we were in a live seminar, I would probably ask at this point, how many of you are new consultants? I'm going to go with probably half are new. And if you're not new and you've heard me before, that's great. You will probably pick up something along the way here that you've had, you know, maybe you heard it last year or the year before that, but it's always nice to hear it again. So we're going to talk some about being organized, some about the different types of entities that there are for tax purposes, and then we'll get into some more nuts and bolts about how to utilize really the nuts and bolts of income taxes, whether you're doing them yourself, you're using your own preparer, you're using TurboTax or H&R Block, or someone like me. So, Heather, are we getting feedback on questions yet, or?
No, not that I'm seeing.
Very good. Okay, so they're kind of start at the beginning here. There are 3 types of businesses, basically. Most of you all will be sole proprietors, meaning that you are running Pure Romance by Heather, or Pure Romance by Candace, Pure Romance by Julie, and you are going to report, all of it on your personal income tax return. I'm talking about income and expenses, and there are pros and cons with that. The pros are that it's very easy. It goes on your personal income tax return. The cons are that there's not a whole lot of liability protection. The good part is Pure Romance has its own protection. I'm not talking about that kind. I'm just talking about if they were trying to attack the business. And so most people start as a sole proprietorship. That's kind of the basic where most people start. The limited liability would be the next one as far as perhaps how sophisticated you become. So you probably are very familiar, everybody out there knows about LLCs, limited liability companies. And then the next one, again, if you're going to explore that, it's probably for liability protection. There could be reasons why you and or your husband want to protect any interest from the downfalls of being in business. And the last one is probably a corporation. As many of you know, there is this thing called an S corporation, where you have basically a separate entity. All the income and expenses go into that and come out of that entity. And you also pay yourself a salary, like a W-2 employee, out of that. And there are some tax benefits that are still in play with that. And typically, as you grow, if your sales are in the $40,000, $50,000, it's not cost beneficial to go through the expense of a corporation. But if you're a seasoned veteran at this point, your sales are consistently over, or your income is consistently over $100,000, you probably want to talk to your tax advisor about setting up a corporation and all of the fun parts with payroll taxes. And of course, Heather can provide you some more information on that if she wishes to.
Hey, Mark, can I clarify real fast? Because we do have some girls that are brand spanking new.
Okay.
So the word liability can be really scary to some people. So under his first main bullet, the sole proprietorship, where most of you are going to be, this liability is different than the liability insurance that is provided by Pure Romance. What Pure Romance provides to us is product liability. So if someone were to try O and had a wild allergic reaction to it and decided that they were going to sue you, you're covered. The company would provide you with legal representation and get that all taken care of. So that's that liability. This liability he's talking about is if you go in and do something to a hostess's home that requires like the entire downstairs to have new hardwoods put in. That's you personally that's responsible for that, as opposed to when you're incorporated, your corporation is responsible and there's only so much they can take from a corporation. Now, on both of those ends of the spectrum, I can tell you that in the 9 years I've been in business, it's literally never happened to anyone. So please don't panic about either side. I just want to clarify for you the difference in liability on either end.
That's right. Thanks, Heather. Thanks for clarifying that. I don't think I need to elaborate on that anymore, so thanks, unless you do.
Nope, go ahead.
Yep. So it is rare, and I kind of start here because it's important. It's important for people to understand that most of you, like 98, 99%, will be sole proprietorships, meaning that what we're really talking about here is not a separate income tax return. It's a separate form on your 1040 income tax return, and that's the Schedule C income tax return, or form, Schedule C form on your personal income tax return. Can you guys see on my screen? Like, can you see Heather's picture over here?
Yes, they theoretically should be able to see anybody's, anyone that's showing their video, they can see them.
Sure. Okay. So the next stage, kind of in how to run a business, right? Because we have some people who are brand new. And so a little bit on business 101 here. So when you're running a business, one of the first things you want to do is you really want to be able to argue and defend that that is a business. And this is really important because you may show a loss, at least for your income tax return, for the first or second year, particularly the first year as you're spending money, launching your business, but you're not getting a lot of revenue right off the bat. So one of the first ways you do that is you establish a separate bank account, and you say, it's just business 101 is all the income should go into a separate bank account, and then all the expenses in theory should be paid out of that bank account. Even if that means, you might pay something with cash out of your pocket and you need to reimburse yourself out of that account over here. This will also, we'll hit on this when we organize everything in a little bit, that it's a whole lot easier to organize it when you see all the income going into one account and it's not commingled with your husband's paycheck and miscellaneous deposits and your paycheck if you're working also with a W-2, as a regular employee. So it's just a good habit to get into. The other part, so the next part is, all the receipts. Remember, what you're taking deductions for on your income tax return, if you ever get audited, they're going to ask you for backup. And remember, they're going to ask you this for 7 years. That's the length of time. I'll touch on that again. But, when I say receipts, we're looking for you bought supplies for party supplies at Target. You want to have a copy of that invoice from Target that shows what it was that you purchased. Because if we just tell the IRS under audit, yes, I had $550 worth of miscellaneous supplies over the course of a year, that's going to be great. And then they're going to ask you for the detail of that, meaning what day did you buy it, how much was it, and what was it. So the individual receipts, a little bit of record keeping here. You also probably need to be aware that there are such things as major purchases. Office computers, office furniture are probably the main two. And these are things that have a useful life for longer than a year. And so the IRS requires that you capitalize these, meaning they have a life longer than a year. And there are ways to write them off all at once, but you need to remember what they are. So kind of throw them somewhere else when you're organizing your data. And when TurboTax comes up and asks you if you bought any capital purchases, now you'll know what they're talking about. Or your own preparer says, did you buy anything major? He's not talking about a major case of, just like me, he's talking about a computer. And then, of course, the mileage. We'll talk about vehicle expenses as we go along. Mileage is a big deal because you all travel, and it's probably after the inventory costs, mileage is probably the second biggest tax deduction, perhaps right along with travel, to some of the conventions. So those are the top three. This is really about how to organize yourself so that you're separating out your business income and expenses from your regular household income and expenses or anything else you have going on tied in with your lives. So that's a little bit on 101. And tied into that, the second part is, are we reconciling our bank accounts? Are we keeping good records? And this really feeds into how are you tracking your income and your expenses. And for the new consultants out there, this is how you figure out on your own which products really sell. And this is a little bit less about income taxes and a little bit more about how to run a successful business as the manager of that business, to have the right product in inventory, the right quantity in inventory, and probably some on how to upsell. I'm sure Heather talks once in a while about how to push various products along, toy cleaner with toys, for example, and how to know what's tracking, how to analyze it. So there are lots of people who have been around with various spreadsheets on tracking things, but usually most consultants want to track their sales, their major expenses anyway, and their mileage on a monthly or quarterly basis. It's kind of a good habit to know where your money's going, where it's coming from, and then how are you going to organize it? Are you going to organize it in an Excel spreadsheet or a notebook pad or the after party summary sheet that a lot of consultants will use is a great tool. So what that's really doing is organizing that party. And this is really just the next step of organizing many parties into a monthly picture or a quarterly picture. And as you become more and more successful as a consultant, you'll know, which months are better, which months are not so good. I think most people will say August is not so good. It tends to be busy, and February tends to be great. So for money management, that's important. And also, when you organize it monthly or quarterly, it's really easy to summarize it at the end of the year. And I've talked to various ladies over the years. Some of them have their data and it's not a big deal. A couple hours and they're done. Others can literally spend all weekend or perhaps longer organizing stuff. So what I'm trying to do is help you guys get organized at the beginning of this. And that's kind of why we talk about this in February, because income taxes are paramount right now. And even if you're just starting, maybe this is your first webinar, so you don't have to worry about it for your taxes you're filing right now, but you could take a jump and get ready for next year right now. In other words, get yourself in order and be organized from this point forward.
Hey, Mark, when you're done with your piece and they've got their questions answered, I can actually pull up the spreadsheet that I've been using for years and just show them real fast how they can use that too.
That would be great, Heather, because I know I have constant questions. I think you're talking about the spreadsheet that's very widely used.
Yeah, Marianne Stevenson created it.
Exactly. And there are some questions about how that spreadsheet works. So
yep, no problem.
Yep. And if there are questions along the way, feel free to jump in, post them on the chat. I think it'll show up on my shared screen somewhere.
And I'm watching it too. There has not been any.
Very good. So either they're not paying attention or they're following along.
Or they're overwhelmed. Yay!
Right. So the next part is, this is a common question, is what are my normal expenses? So let me start at the big picture. A lot of people say, okay, I sold 40,000 and I know I spent 20,000. Is that all you need to know, Mark, to do my taxes? That's good? No, that's not quite good enough. What we really need to know are the different categories where you spent that $20,000. Sales as a whole was fine, but now I need to know, okay, break down your $20,000. Tell me how much inventory you purchased. We'll talk about that a little more. How much was for supplies, telephone. And so this is probably the top dozen categories for you guys. They are the inventory, postage. This is postage that you're paying out. Freight is usually what you call it when you're paying it to Pure Romance for the freight in. Party supplies, hostess gifts. These are things like baskets or, those small $40 things that you pick up and take with you to the hostess. And these are probably your VIP hostess, your repeats. Office supplies. You can also get away with some safe deposit box fees and small stuff like that. But then advertising is a big one. All the trade shows you guys are doing, stickers for the cars, magnet signs, and then all the propaganda that you're handing out, business cards, all of that, advertising expenses. Telephone, we'll maybe hit on that a little more detail in a bit. And I'm talking about cell phones here. The same with internet. If you have a dedicated Wi-Fi that you use to travel, some people have Wi-Fis and they'll take them with them because they're actually running credit cards and they don't want to use a landline or rely on a hostess having a landline. So they just carry their own Wi-Fi now. I'm seeing that more and more. Travel, obviously, to conventions. That's what this travel is talking about. This is not talking about mileage going to parties. This is talking about travel for meetings, travel for conventions, that kind of travel. Meals is a big one. And then, you can also get away with some the legal advice you might get with regards to your business, tax preparation fees, professional fees is what we call them. And then 1099s. This is a big one. I think I haven't seen enough from Pure Romance yet to see how their 1099s look. If you get a 1099, you probably want to be able to understand what's in it. And when I say what's in it, it should reflect your override checks, your bonuses, and the money that you're getting. Heather, have you talked to Pure Romance or have any insight on this? This was more of an issue with slumber parties.
About the 1099?
Yeah, not understanding what all was hitting it.
I will tell you that I did get a breakdown of mine because it was significant.
Right. And was it a big deal from Pure Romance to get a breakdown?
It was 100% legit. Like the only thing that I will be line iteming is the board trip.
There you go. So
everything else was legit.
Right. And I think it was probably pretty easy for Heather to get that breakdown. So I would say, if you understand your 1099, and I'm talking about the 1099 that you're going to get from Pure Romance, if you understand it, that's great. If you don't understand it, or if it's large, like $10,000 and up, you may want to request from customer service a breakdown on it.
Yeah, just so you know some of the things that are on your 1099. So your free product that you earn every single month from the company will be on there. Mm-hmm. If you win a corporate incentive, for those of you that are working towards the Vegas trip right now, that will be 1099 as well as income, even though it's a free trip to you. PR giveth and the IRS taketh away. So that'll be on there. And then if you were to win any other rewards, incentives, like Casey Bickford got the $500 of swag that she won in January. So she'll have that on her 1099 for this coming year.
Right. And let's talk, we'll hit on this again, but free products. So let's remember that one. They should be taxing you on your 1099 at the retail value of that free product.
Correct.
I think that's what they're doing. And so that's a lot of times, if your free product for the year is, say, $1,000, you can keep track of it manually off their website or off of invoices that you get in the hard copy paperwork. If it's significant free product, you want to probably ask for a 1099 breakdown, because free product, when they send it to you on a 1099, you want to be sure that you're including that as inventory that you're almost purchasing, because it has a tax value. It's not like it's free for income taxes. It has a tax value because they're including it on your 1099.
Right.
So, and that's important if you're using perhaps a TurboTax or a preparer who doesn't do a lot of retail businesses, or understand the fact that you're getting free product and it's in your 1099. Make him or her aware of that.
It really, y'all, I'm gonna toot Mark's horn here. I cannot stress to you enough how important it is that if you are going to have an outside tax preparer, that it's somebody who literally understands our business. Not network marketing, which is not what we do. We do direct sales. So if they don't really understand how to work with the taxes for direct selling, you're losing money on your taxes. I promise you. I've seen consultants go years, and then they finally get a good CPA like Mark who understands it. They pay, a couple $100 for the year, and they save thousands of dollars, but they end up having to go back and refile taxes from previous years because they were not done correctly. So that's why I have Mark every single year do this, not just to educate us on our team, but to let you know that he is a resource for you to hire and utilize, and you will never regret it.
Right. And this isn't, a lot of this is education. This isn't a sales pitch per se, but I care about Heather and her team and the rest of the Pure Romance folks. And I know that when Heather and I first started, we didn't understand what was in that 1099 until we got the breakdown. And then we realized that inventory was in there. And it was a game changer.
Yeah.
Heather, do you remember that? It was about 5 years ago.
Yes.
Yeah. So let's talk a little bit about inventory. And this is a confusing, and I hope I don't lose you. It will get more exciting, I promise. So just bear with me for a second. So as retailers, the IRS says, listen, we're not going to let you just figure out how much money you made during the year and then spend it all and buy a bunch of inventory at the end of the year so that you have a zero tax income. It doesn't work quite like that. And so I have an example here of how the big picture works. Because what you need to know is the IRS adjusts your inventory that you bought based on your beginning of the year inventory, the cost value of that, and the end of the year inventory, the cost value on that. So if this is your first year, you probably should have gone back and figured out what's your cost. You should have taken a year in inventory. A lot of times Heather will throw out on her board or her messages, hey, don't forget, count your inventory. I don't know if she did this year or not, but if she didn't, it's not a big deal. She says she did. So there you go. Pay attention to her board. And because that's a big deal. if you didn't do it, you can do it today and kind of back into it. You know, you count your inventory tonight after we're done, and then you add back the inventory that you sold and subtract out what you bought, and that'll get you back to 1231. But here's the big concept. So I have 3 bottles of Just Like Me that I borrowed from my wife. And so the concept is you purchased 3 bottles from Pure Romance, right? But you only sold 2. So 2 went out the door and you sold them. The IRS wants you to recognize the income on those 2 you sold, and they want you to recognize the expense of the 2 that you sold. What they don't want you to do is take the deduction for the one that you're still holding. They want you to carry this expense on your balance sheet, that's the technical term, as an asset, and then expense it when you sell it. So you might expense it next year when you sell it in 2015. So that's kind of a visual, and this was Heather's idea, and I like it because this is really what the IRS is trying to do. And so what this is walking through, so the spreadsheet that's on your screen right now, the inventory at the beginning of the year, you know, let's say it's $100, and you do some math here. And so basically it is just math. You figure out what you purchased, and then did you have any personal use items? You subtract those out, and then, you know, put your inventory in at the end of the year, and literally the math walks you right down. It says this is what you get to deduct. Now what that is doing formula-wise is the example that I just walked you through, where you bought 3, you sold 2, the IRS says, okay, you can deduct these 2 because you sold them. You've got income and expenses, apples and apples, but you don't get to deduct this one because you're still holding it.
Mark, we have 2 questions.
Well, that doesn't surprise me.
When noting inventory, both beginning and ending year numbers, are they calculating at retail or at actual cost?
Number 1 question I get on this. This is at your cost. So a lot of people will say, this is, so logistically, people will take an order form and they'll mark it up and they'll say, okay, I have 13 Just Like Me's and, you know, 12 of those and 10 of those, and they'll do the retail value, and then they know that they're at a 45% discount. So they'll figure out the total retail value, maybe it's $1,000, and minus 45%. And so they know that they spent $550 in cost on that. So that is the number 1 question. And I even ask all of my clients that when they do their spreadsheet or send me whatever they have for the year-end inventory. Okay, is this your cost value or is this the retail value? It really doesn't matter. Just clarify what it is. And if it's the retail value, okay, what was your average discount for the year? And then I always get the next question of, well, I was at 40% for part of the year and then 45% for part of the year, and, you know, come up with a reasonable average, you know, because the mathematics are kind of crazy to really figure it out by product. So, you know, if you were 50-50, you know, the average sounds like 42, 43%. And I think that's arguable and defendable.
And honestly, I mean, like, unless you do something really super shady or have some numbers that are very skewed, most of us are not doing enough business yet for the IRS to flag us.
That's right.
So
yeah.
Be able to defend the numbers that you have chosen, and you'll be fine.
Right. And the bigger red flag would be if you're putting down that you're a retailer and you have 0 inventory, especially if they ever audited you or asked you about it. It's a red flag.
And as a new consultant, clearly you're starting the year with no inventory, but you don't want to end the year with no inventory.
Right. So, and yeah, let's leave it at that. The easiest part.
Go ahead.
Oh, go ahead, Heather.
So the second question was personal use items also includes demo. Is that correct?
No. Personal use items are coochie that is it still called coochie?
Yeah.
Yeah, coochie that you're pulling out of inventory and giving to your husband to shave with. That's a personal use item. Okay,
so the demo items go under expenses.
That's right. So let's talk about that real quick. Because, do I have one on here? Let me fast forward for a second. Yeah. So I don't know that I broke out demo, but let's talk about demo. So demo items and inventory items are different. A a demo item will never be sold, right?
Correct.
Something that you're going to use until it's no longer in the product line, and then you're either going to you're probably going to throw it away because it's been around and around, everybody's touched it, and it's just trash. So demo items, when you buy them, just like your demo kit, is 100% tax deduction. And sometimes for new consultants, I'll even put it on as a whole separate line item, depending on what kit they buy, because it can be substantial, $500 demo kit. And all of that is separate from inventory. Inventory is stuff that you've never opened. And yeah, a good way to think about it is Bath and Body Works or Victoria's Secret. Their demo is all of the hand lotions that are up there, and their inventory is the stuff that's unopened behind it. So, same.
Thank you. One more question about this. Would personal use items also be items you've given to your friends as gifts, but is there a distinction between giving it to like a friend or family member and giving it to a customer as a gift?
Well, I think if you're giving it to a customer as a gift, there's a blurry line between on
mine, that's an expense.
Yeah, I don't think you'd be wrong in doing that, particularly because it's a customer and you're trying to offer them a repeat. If you're pulling it out and giving it to just a friend or a family member, it's probably more personal use. Yeah. But yeah, if you're just giving it to a customer as an incentive to do more business with you, then I would call it an expense.
In my business, my friends and family get my buying discount. So I don't give them free product. If I do, it's an expense, and they're written up on an order form as a client.
Right. And so you're just passing along to your friends and family at cost.
Right,
because they're your friends and family.
Right.
Yep. And I think
there's still an order form. I still have an order form for every single thing that goes out of my office.
Yep. And I think that's a good point, kind of as a small business owner, because regardless of what you're doing, if you're giving away product, you're not having accurate financials, and you're not being fair to yourself, because what you're really doing is saying, yeah, I spent $45 on this, and here you can just have it.
Right.
And that's not generally how businesses work. I mean, even, most people are familiar with restaurant businesses, and they'll give employees discounts, but they don't just give them free food.
Right. It's a friends and family discount.
Right. Just like an employee discount in a regular restaurant setting. So yeah, good point there. And that's really a business kind of 101, because you're putting your own money out, ladies, and you need to have the mentality that you're going to recoup that money plus 40, 50, 60% profit. That's how it's designed to work. I'm going to scroll down and move on. So let's switch gears for a little bit. You keep your inventory questions coming to Heather. If you do, she'll kind of gather them over there. Let's talk a little bit about vehicle expenses. As I mentioned, this is usually a big line item, and I want to talk about the two options here. So we have actual expenses, or we have standard mileage. This is the IRS specs on this, is you pick one or the other, and once you pick a silo, you're stuck there for the most part. So almost everybody that I see who goes into this business as a sole proprietor in the beginning goes with standard mileage. Why? Because it's very easy to calculate. It's very easy to quantify on your tax return, and it's almost audit proof, I think. Actual expenses are kind of blurry, particularly as you're growing a business in the beginning. And it's just more complicated. And I've run the numbers back and forth, and until you get to a certain level, it's almost identical. It's remarkable when you run the actual expenses and then take a percentage that you use for a regular business versus the standard mileage. There are some exceptions, and those are the people who are doing consistently more than $100,000 of income. And, there's some tax reasons why actual expenses can be better. It can also play into your preference. Do you like to trade cars every 2, 3, 4 years? Or do you buy a car and drive it for 8 years and put 200,000 miles on it? If you're doing that, standard mileage might be better. If you're one that likes to trade and that's where you want to spend your money, expenses can be better. So I'm going to kind of focus on the standard mileage. I've already talked about the importance of a log. And so remember, a log should kind of show us, or it should show us, dates, where we're going, and how many miles were in that trip. And a lot of people will use Excel. A lot of people will use day planners. There's no right or wrong log. The only wrong kind might be on your tablet or your phone or your iPhone, where you're using your calendar and it's going to disappear after 12 months. That's a really dangerous one if that's your log, because the IRS is not going to audit you within that 12 months. It's going to be 24 to 30 months later, and your log will be gone. And remember, there's more to mileage than just the travel to the parties. There's travel to the post office. There's travel to a store if it's to buy supplies for that party. There's travel to the airport to go on that business trip. So remember all of the mileage that it gets incorporated there. And then the standard mileage rate is 56 cents a mile. That's the first bullet point here. So if you drive 1,000 miles, they're giving you a $560 deduction. So that's why it adds up quickly. And if you're not deducting vehicle expenses, either the actual expenses or the mileage, you're missing something here. I think that's probably the nuts and bolts of that.
Hold on one second. I just want to give you guys a quick word to the wise. So Virginia is 100% on top of this. When you do your registration and renewal for your vehicles and they ask for mileage, and you say, okay, so I had 20,000 miles on my car at the beginning of the year, and I put 14,000 miles on it in 2014. And on your taxes, you report that you had 12,000 miles that you traveled for your business. Mm-hmm. You can fully expect to get a letter from Virginia that says, congratulations, you have a business vehicle because you used it more than 50% of the time for your business. So now you don't get the tax break that we give you. You have to pay full taxes on it, and you owe back taxes on it. And I know because that happened to me. So really watch what it is that you're reporting and weigh that out so that it's honest. Because if it's not, Virginia's on top of it.
Yeah, that's a good point. And almost everybody that I see who does that, they flag them on it. And
my miles were legitimate. I just didn't think about it as, okay, yeah, for this year, it really was a business vehicle. And when that happened, that's when I decided to buy my car as an actual corporation vehicle. So like Pure Romance by Heather owns my Escalade. It's not Heather Pillows. It's my company's.
Right. And that gets a little back to the liability side too, because Heather at her level, she has a corporation. I guess I can say that, Heather, you wouldn't mind.
That's fine.
And so if someone's riding, if she has a helper riding with her, and let's say they're in a terrible accident, obviously she has auto insurance. And then they, the right lawyer or wrong lawyer might try to attack her business because it owns the vehicle. But that's where the liability would stop in that situation, because
they couldn't come after my home and my husband's bank accounts and all of that because it's not part of my corporation.
That's right. So, and that's another one is make sure you have enough auto insurance, because that's the only place where I can see some liability. Don't have collision only, and just make sure you have enough, because if you have helpers ride with you and something happens, they might be your friend today, but if it's bad enough, their attorney might not think they're your friend in 30 days.
Yeah.
So I'd rather have now than find out the hard way. Let's talk a little bit about home offices. So if you have a home office, remember that counts as a business expense. And there are a couple of big parts of this. So a home office, let's talk about how it's defined first. It has to be a room in your house that is totally separate and can be closed off from the rest of the house, meaning it has 4 walls and a door, and you close it off from your regular living space. And therefore, you can quantify the square footage of that office. And so the square footage is important, because if you have a 2,000 square foot house and you have a room that's your office and it's 200 square feet, what you do is you take your 200 square feet and you divide it by your 2,000 square feet. Okay, and so then 10% of all the expenses that are allowed become an expense of the business. So, mortgage interest, if you own your house, real estate taxes, reasonable maintenance, utilities associated with that house, they all go towards a business expense, and that's called that home office deduction. And, again, it can add up here. So you kind of want to use some discretion. I always get questions about, I have an office, but it's also my den. Well, that's a gray area. Or I have an office, but I only did $10,000 in sales. Should I really have a home office deduction? That's probably something you want to talk about too, because you don't want to draw attention to yourself by having a loss year over year. That's not the right thing to do. The general theme is there's no hard advice that I've seen recently, but a business should turn a profit 2 out of 5 years. They understand that businesses lose money, but long term they should make money. And if they don't, are they a business or a hobby? You always want to make sure they're a business, and that's kind of what I'm centered on here. Because losses from hobbies are not deductible, meaning if you have a bottom line that's negative, it doesn't offset your W-2 wages and other wages or other income. I think that's a home office. Do we have any questions out there on home offices? This is always a hot topic.
You did explain that they have to have a door, right?
Yeah, so it has to be totally enclosed. If you look behind Heather there, you can see her door. So she's in her office, and you can see it's pretty obvious. I'm not in my house right now. I'm actually in my office, but I'm in a small office.
So when I decided to make this my office, you can't have all your kids' toys and all their crap in here and call it an office. That's a playroom. So again, if you were to be audited and they were to come in, you better have a legit office that matches the square footage that you have chosen. So don't try and fudge this and hope for the best. Even if it's like when I first started and I literally kept Rubbermaid bins under the bed of my bedroom. I did not take a home office deduction my first year in business because I didn't have an office. But my second year in business, when I really started kicking this in and I decided, you know what, like I need a dedicated space, and I took over my kids' playroom that they never played in anyway. Their toys went into their bedrooms, and I took over the space, and I was able to legitimately declare it. And then it's easy because every year the percentage is already done. You know what it is because it's the exact same room unless you move. That's right. And it really, that is probably the theme I see is that most people don't have a home office or they don't claim it at first. And then as things grow, part of it is you just start to grow into a space because you need to. And then you are making more money and you're looking for some deductions. And it's right there. We'll hit on donations. I'm almost done. This is kind of a quick slide. And this is an old one because Slumber Parties had Sparkus. Pure Romance is the Patty Brisbane Foundation. Yes. So don't forget that if you make donations, you can write those off on your taxes. Also, don't forget mileage for charities is a donation. And same thing, requires receipts. Not a whole lot there. Then I get to a little bit about, this is kind of a tax 101. So here we are for 2014. If you're single, standard deductions, you get a standard deduction. This is not talking about taxes for the business. This is just an overall kind of tax update on this slide. Married filing jointly is now $12,400. This is kind of a little side note here. As this number keeps going up and mortgage interest rates are relatively low and house prices are relatively low, I'm seeing fewer people qualify for itemized deductions. Why does that matter? Because if you don't itemize, you don't get to write off your donations. So just a little tidbit there. So in other words, you have to have more than $12,400 worth of mortgage interest, real estate taxes, charitable donations, and personal property taxes. Those are probably the big four before you're going to be able to itemize your deductions. Benefit of owning a home. Benefit of owning a home. Yep, exactly. I do have a form we'll look at, a sample form for the Schedule C. We'll look at that in a minute. So a lot of questions I get are, what's an income statement look like, Mark? A lot of people might not be in business, or this might be their, before, this is their first endeavor in it.
So I kind of put on the slide here just a boilerplate, what it looks like, what you should be tallying up to help your tax advisor understand what it is you're doing. And this is just a little example, $27,000 worth of sales. Maybe they had some outside sales or some internet sales. So, give me a total sales. You might also include, and I included in this example, I included sales tax collected up there because it's all the money that you collected. And then the sales tax expense would be down here in inventory, or some people would break it out as a separate line item. But then you'd break down all of your expenses into separate buckets and, kind of lay it out for him or her. And then you come up with a net income, and then, the net income doesn't include mileage because these are just real dollars. So in other words, you have a receipt or something to show for everything on here, all of these expenses down at the bottom. And then your mileage would be figured out kind of based off the log. So just a little template there for you. We talked about this at the beginning, why it's important to organize. We're looking for trends. We're looking for our income and expenses to be recorded properly. This is really important under audit because if you ever get audited, they will take your bank statements literally and they will add up all the deposits, and they will want to see or be able to be explained where did all the deposits come from. And it should be, if you're working as an employee somewhere, you or your husband, okay, we have W-2 wages, okay? And then if you're commingling your business income in with your personal account, guess what? It better make sense because they're going to wonder, if it doesn't. Now, if you have a separate account, it's real easy to go, well, I have $30,000 worth of deposits right there, and that's my business account. So that's Schedule C right there. So it's kind of helping to separate that, and that's to protect you guys under audit. You also, I see a lot of people track major customers. You want to know who your VIP customers are, and you don't want to just know who they are in the back of your mind. You might actually want to see how much they've purchased from you, either to reward them with better discounts or to, incentivize them somewhere, or at least say thank you. Databases, increases party sales. And remember, back up your computer files. I throw it in here because it's something that a lot of people forget about. We're getting better with the cloud storage, but I can tell you my wife lost all of her data 4 or 5 years ago, and it was a blow. We thought we had a backup, and it was a dated backup. So we had some of it that we could recover, but not all of it. So, get a flash drive and back up whatever you're saving all your stuff on. And the same goes with your tax data. Don't just save it on your one laptop and be happy. Either send it to your tax preparer, like Heather, for example. I have a copy of everything of hers. So if her house burned down, I could send her back all of her tax data when she rebuilt. Let's see. Finally, I think we're almost done, ladies. Yeah, so, I kind of wrapped up with keep it simple. In a group setting, I always have questions about how do people stay organized? Are they using file cabinets or binders or there's accordion folders? What are they doing? It's all over the place. Talk to your fellow consultants. Heather's holding something up.
Yes, an accordion file. Super, super easy to do, and you can either do it by month or you can do it by category, and it's all in one place and transportable. Like
accordion file is probably the number one that I hear about because most of what you guys do fits in an accordion file as far as expenses, and it's relatively easy. So, yeah. Let's see. Some miscellaneous stuff here. 7 years. Remember that. The IRS can go back 7 years.
I've been in business 9 years. I can get rid of 2006 and 2007.
You could. Yeah.
Should I?
Should you?
Yes.
Is it taking up space?
Yes.
Okay. Well, then you might consider it.
Okay.
Yeah. I'm a big advocate of 7, maybe 8 years.
Okay.
9 years, not really.
Okay.
The only reason they would go back further, there is a statute out there where the IRS can go back further if there's any kind of fraud that's going on. So just be aware of that. I don't see it getting enforced very often. But most of the time when I see clients under audit, they are auditing returns from 2 years ago. So it takes the IRS about 15 months-ish, a year and a half, to kind of get to you.
Got it.
So it's not terribly long, but I can't remember what I did a year and a half ago. So yeah, write it down and keep it somewhere. And that kind of gets to, box it up. So Heather just showed us her accordion file. So what she probably does is throws that whole accordion file and her tax return and all of her sales, party sales records, all that into a box, a banker's box or something.
And I get a banker's box. They sell them in sets of 3 at Staples. And so everything, all the party files, all the taxes, all the receipts, everything at the end of the year, once my taxes are done, they go into a box per year, labeled with the year, and they're shoved in my basement.
Right. And that's the same that my wife and I do. It's really the same that I see in businesses all over. And what you're doing is you're organizing. And then if there's a problem 2 or 3 years later, you can dig them back out. You can also dig out, who that customer was that ordered from you 2 years ago. There are various reasons why you want to do that. I'm sure, Heather, you've gone back to something.
Oh, gosh, yes.
Yeah. I know my wife has,
even during booking blitzes, like just on a completely unrelated, doesn't have anything to do with taxes, but you want to go back and contact past hostesses and
right,
what they ordered and all that jazz. Although I will say that Pure Romance has a much better online tracking system for that. So if you're using it properly, it should really be at your fingertips.
Right. We're almost to the end, so I'll throw it in here. So there are a lot of questions, those of you who were with Slumber Parties before the transition to Pure Romance. We had probably that 3 to 4 month window when everybody was selling their Slumber Party stuff or trading it between each other and pilfering out the good stuff. I think we're beyond that now. So you really need to look at the inventory that you still have that's related to Slumber Parties, if you have any, and figure out, okay, is it really still inventory that I'm going to sell, or do you need to write it off? And, I think the IRS would accept if you wrote it all off this year, if you still had, some amount, and you said, well, I might try to sell it, but it's going to be at a big discount, and I don't know if I'll ever sell it because I'm not even showing it. It's only going to be the old customers who know about it and are looking for something specific. I think you really need to analyze how much Slumber Parties inventory you have left, if you have any left, and consider writing it off. And you would do that by not including it in your year-end inventory or keeping it at least as a separate page that you can talk to your advisor about.
So it would be for your January 1 inventory, it would have been included. It will not realize itself for your December 31st.
Right. January 1 of 2014, it would have been included. December 31st of 14, you probably wouldn't want to include it. Would not.
And is there any benefit to them taking a picture of all of it just so that they have it?
Yeah, I think there are. I think that if you ever had to defend it, you would have to explain the whole story of Slumber Parties and being sold and how it became Pure Romance. And, that would kind of be a conversation in itself.
Yeah.
But obviously, if you had a picture of it, it may help give a visual. So I think you could probably argue it with an old catalog. Those are still floating around.
Okay.
So what else? Let's see. Let me grab this real quick. So I think
Does anybody else have any other questions for Mark?
Yeah, let's go through this real quick because this might spawn a question. So this is off the IRS website. This is your Schedule C, where you're going to put all this. So like name of proprietor, Mark Sherry, principal business, retail sales, business name, Mark Sherry, or Pure Romance by Mark. And so then you're going to fill out the rest of this here. You're a cash basis taxpayer. And then your gross receipts would go on line 1. And, if you have a 1099, it's going to go on a separate input screen, but it's going to flow over here. And then all of your expenses go on this part 2. All those expenses I talked about on like slides 6 or 7 or on the income statement, advertising, office supplies, this is where they go. So if you're doing your own taxes, look at your form and make sure it makes sense. This is the form you're looking for. And if you scroll down on page 2 of this is part 3, and this is the whole inventory thing. So inventory at the beginning of the year, purchases that you purchased, you don't have any labor, supplies. You would want to subtract personal items withdrawn for personal use. This is where that would go right there. and then inventory at the end of the year. And this is going to work through the mechanics of, add, subtract, get you to this number.
Max. Sorry, Mark. I can hear my son Max in the background. Someone out of state would like to know, can you help them in another state? And if not, how do they go about finding an appropriate CPA in their area?
Sure. So I can help them. I have clients in Arizona, Colorado, Oregon, Florida, Maryland. So, it's not my specialty. If you don't have one, so every state has what they call the State Society of CPAs. So if you're looking for a CPA, in Virginia, it's called the Virginia Society of CPAs. If you're in North Carolina has a society. Florida has a society. I have clients down there. You can Google it, and they all have a list of different CPAs and different. Some of them are more sophisticated. They'll say what their specialty is. It's really hard to give a generic referral. Obviously, I think you don't have to be a CPA anymore to do taxes. So a qualified enrolled agent who's just somebody who's authorized to prepare taxes, if they have a specialty in retailers, or if they are familiar with other direct sellers where they hold inventory, they would probably know this. I'm not sure, if there are other retailers like you guys. I'm thinking about the basket people or the Tupperware people, but they don't have really inventory. You just have to order. So it's a little bit different. It's similar, but different. So yeah, I would say you can start there. You can look around, talk to people. I'm running out, Heather. I don't know. Obviously there are lots of consultants everywhere, and I would say talk to other consultants and see who they like. I mean, I get a lot of referrals from, Heather and Catherine and some of the
Listen, I'm just going to tell you that if Mark can do your taxes, just let him do your taxes. Like,
right.
It's such a drag to try and find someone else and hope that they know what they're doing.
Right. Good. I will say that good CPAs usually don't advertise a whole lot. They might sponsor a few things, but it's really a referral-based business.
And girls, I will be posting all of the contact information for Mark on the group tomorrow morning, so don't worry. I will make him as accessible as humanly possible, along with the PDFs for this slideshow and the spreadsheet I'm about to go over. Yes. So a couple of questions have scrolled through here. So, Shannon, it does not matter whether you're a brand new consultant this year or if you were someone that transitioned over. Demo items are an expense. They're going to go under an expense on your profit and loss sheet.
Yep. Is that a question or a statement?
I answered the question.
Okay, perfect.
Lori, I don't know if you have all of them, so I'm posting it. You'll see this when I post it. His fees are based on the complexity of your taxes, so it really is going to be customized to you. I will tell you, though, that I had a CPA the first 2 years that I used someone that wasn't myself to process my taxes, and she was wickedly expensive. Mark is extremely reasonable, and he actually speaks human, which is lovely. So very easy to work with and absolutely worth the fees.
Yeah, and I can give a ballpark there. I mean, most individual income tax returns these days should be somewhere between $300 or $350 and $550, depending on the complexity. And there's some that are definitely in that 700 range or 800 range. And I'm talking about a 1040 with just a site Schedule C. If you have more going on, it adds up.
Yeah, if you have real estate and your personal and your business and maybe a failed business or whatever, like the more complex it is, obviously the more work it's going to be.
Right.
Leslie, it does not matter what you made. As if you made money, you file your taxes. So yes, definitely report it on your taxes.
Right.
Yes, Lori, that's comparable. Okay. So let me go ahead, Mark. If you're okay with it, I'm gonna take back hosting ability.
Yeah, definitely.
And let's see. Participants, let me find you. Reclaim host.
So I think it's all you.
Yep. Okay, so let me minimize No, hold on. Screen share. Let me just see that. All right, girls. Okay, so this is the spreadsheet that I will be posting to the group. It's the spreadsheet that I've used for years. This is my 2013 version, so you'll see some of the numbers have changed just as updated, but generally you'll get an idea of it. So what I do is every single month I enter in. I don't know why that keeps popping up. I don't know. That's totally bizarre. Okay, so each one of these is a party. So this would be a hostess. Diana was a hostess. She had 5 guests. The subtotal was X. Subtotal for our purposes is plus her order. So it's the whole party sales total, not including tax and shipping. This spreadsheet will automatically calculate the sales tax. So if the sales tax you're collecting at your party is not the same as the number that's automatically populating in the F column, you're calculating it wrong because Excel doesn't make a mistake. And that tax rate is actually entered here, and you can adjust it based on your area or state. So make sure that it's correct for you. You will also adjust the buying discount that you're currently at. So let's say, like I jumped up yesterday to 60%. So for February, I will actually change it to 60% in my spreadsheet for this year. You're also going to put in your hostess credit, which is anything that you gave away to her. Your helper pay, if you're paying someone, and it doesn't matter whether it's cash or product, you're still listing it there. And then discounts. These are additional giveaways. If you did prizes, if you gave her an additional bonus, like for my hostesses, they get that 40% off of anything that isn't covered by their hostess credit. So those extras are actually listed here, and then it'll list what your approximate profit is. If you're doing mileage, you can actually list the mileage right here. I don't do mileage, so don't pay attention to me. But if you're doing mileage, that's the mileage for your party. I actually recommend, just to be consistent, that, like, especially if you're not carrying inventory right now, you have to go to the bank to deposit money, and you have to go to the post office. And you're probably going to the exact same bank and post office every single time. So it should be a set number for your mileage, whether it's 5 miles, 7 miles, whatever. So add up the mileage for your party, round trip, and then tack on your standard 7 miles for the bank and the post office. So then you've got it all lumped in here per party right there. Now, the other thing that is so great about this spreadsheet is that it's going to automatically calculate what your average party is, your average per guest, and your average head counts. So this is how I live my business. This is how I know what my numbers are at any given moment. I can literally pull it up and boom, there it is. I'm not wondering. I don't have to bust out a calculator. I've got it all listed here. Now, this top line, outside orders, this is where I lump anything that is either a legitimate outside order, somebody called me to reorder coochie or whatever. But if I do a sale, if I do, snow day sale, get 20% off of everything, all of that goes there. It does not go as a party because you've discounted everything. So you've given away far more than you normally do at a party as far as your profit goes. So I lump all of that into outside orders, and then I have the file to annotate that as paper so that I know that that's where all those numbers came from. Now, you're going to do that for every single month, and it all will add up at the end of the year in the sales summary of this. So you'll be able to see trends in your business. You'll be able to see which months you did the most parties in, how your guest was going. It averages your entire year here, so you have your annual numbers. And then you know what your total sales were, legitimate sales, what you collected in shipping, what you collected in sales tax, and then what you gave away. Like, how much did you actually give to your hostesses? What your profit is? How much did you make off of your parties in that year? You also have a tax summary here. Oh, I forgot to show you. So when you scroll down in this spreadsheet, not just your parties and all that jazz, you can actually enter every order that you place through Pure Romance. So you have your invoice information. It's all there, including your donations and something that I think we forgot to touch on, Mark, is that there's a difference between shipping and freight. So freight is what you pay to Pure Romance for UPS to get the product to you.
Right.
But shipping is what you pay to the post office when you are shipping products to your clients. Those are two separate line items on your taxes. So this UPS shipping is considered freight in this one.
Yep, exactly.
We don't,
and that's
no
just
longer, go ahead.
No, you're doing fine. That's if you keep them straight, ladies, it's just so much easier. Freight versus shipping. And shipping is, of course, what you charge. So
right. And freight, you can't do anything about. Like, this is a UPS charge. Your personal shipping, when you see how much you spend your first year in shipping and you tell me you don't have any money for inventory, you're going to want to choke yourself because you're spending that money on the Postmaster General and not on your inventory. So the sooner you can invest in one of those inventory credit programs or something that Pure Romance is so generous to offer, I promise you, you will recognize more profit at the end of the year.
Right.
Now, you can also add in all of your expenses for that month. In 2013, I was not organized. Like, it was not good. I have an assistant now who does all of that for me, praise Jesus. So now it's all in there. But I would highly encourage you on a monthly basis to actually add these numbers in here. What did you spend on advertising, like pens or bridal shows or whatever it is that you're doing to market your business? Did you have a bounce check that you didn't get paid? That would be under bad debts. Bank charges, if you have a fee, if you're paying fees for credit card processing, all of that is going to be there. So these are all line items that you are looking for when you're processing your taxes. And even if you didn't do it for 2014, you can still go back and use this spreadsheet and plug it all in. That's what I had to do last year. In January of 2014, I had to plug in all of 2013's numbers. What a big fat drag that was. It's so much easier to just keep track of it.
Yeah. And Heather, let me jump in here. So you might educate them that there's a tab across the bottom for every month. Mm-hmm. And so a lot of people, what I'll see is they'll put their party information in monthly, but then they'll drop all those miscellaneous expenses, advertising and all that into the December.
Yeah, you can't do it. You've got to really break it down for no other reason than for yourself to see which months are more expensive for you. And there are, like Valentine's season, and when we have new products released, all of that stuff is simply going to be an expense to you. And that's okay, but you need to be able to anticipate, to forecast for your business when those big months are going to happen. The flip side of that is that you also need to be able to see which months are lean. If it's because of personal commitments or travel or whatever, you need to anticipate that for your income and make sure that it's all listed there. Now, Mark, in this, I don't know where we lump demos. Where did we put the demo stuff in here?
You know, I think most people put them under here under miscellaneous, and then they'll just right beside it, demo kit or bridal show, you know.
Yep. Got it.
Mm-hmm.
Okay, and then it literally shows you, like, I love the graphing that it does. I mean, this thing is magical. I would love to take credit for it. Clearly, I can't. Marianne Stevenson is an Excel goddess out of Utah. But this is just invaluable for you to be able to see. So the cool news is that it's only February, so you can catch up on January and February and get those numbers in. And by the time this time next year rolls around, you're literally going to go boop and click the tax summary and print this out and send it to Mark, and you're going to be like, yay, we're done.
Yep. Mm-hmm.
So easy. Okay, so let me get back to my screen. Where am I? Okay, so there's some questions here. Let's see. Where has this spreadsheet been all my life, Jody? Jody, I have posted this every single year, so I don't know where you've been, but I'm glad you're seeing it now. All right, does anybody have any questions? Mark has been totally awesome, hasn't he?
Yep.
Yay! Okay, so just as a quick recap, girls, I'm going to post the slideshow that he just went through with all of us, so you'll have access to that as well with all the lists and everything in it. I'll be posting the spreadsheet. I'll be posting all of the contact information for Mark. And clearly you're welcome to ask questions. I do have to give you a disclaimer that I technically am not allowed per corporate to give you tax advice because I'm not a CPA, and that makes me liable. But I will tell you what I do in my business, and you can discern whether you need to do that as well.
That's right.
They're beautiful.
Right. So I want to say thank you to Heather for having me here, and you guys have been great. So feel free to, if you have specific questions, just email me, and I will try to get back to you. And it may be short and sweet, but I'll try to help you as best I can. So, all right.
Thank you, Mark. I really appreciate it.
Okay, you're welcome. Are you staying on, Heather, or are you done too?
I'm going to stop.